Hello. Oli, please, can you hear me now? Be drawing this support and resistance. Sorry for that. Not clear. Okay, sorry. The voice is not clear. The voice is not clear. Is the voice clear, please? Okay, it's clear. All right. Okay. So now let's all draw support and resistance lines. How to draw support and resistance. Now, the first thing you want to do if you want to draw support and resistance and know the major turning points is to look at these points. You go to them and you type, you confirm these major turning points. Will you say this place is a major turning point? Will you say that? How will you know that it's a turning point? After you click, use your line to this, see multiple touches, you click it, you go back. Look at the touches here. Here it is support, but it became a resistance here. Look at the touch here, look at the touch here, look at the touches. Now you say this place is a support and resistance zone. You can go as far as, look at my cursor. If you look at this is 2009 August, right? You can go back as far as major turning points. All right. So these are the turning points. You can now click, use another one. Let's find out another turning point. This is another turning point according to the monthly time frame. So what you'll be is to be expecting price to touch this place and give you candlestick patterns that will enable you to enter the market. The next one is here. This is another turning point. Include your week. So this is weekly time frame, how the points are touching. Now you go back to your daily because you are not going to be trading with the weekly time frame. All right. You go back to your daily and you see the price according to the daily time frame. You see according to the daily time frame. Now the weekly has given you some key turning points. Now you have to come to draw your turning point. Come back here and put our cursor. This seems to be a turning point. You click it, you lock it. Once you've discovered it, you lock it. All right. This is your turning point. You can see the price got to this point and it's turned back. It's turned back. Look at how many pips it's turning. Almost 200 pips. Look at these places. Market turned back. This is Euro USD. Look at the turning point. Very, very huge. Very, very huge turning point. So once you have discovered these key points, trading becomes very easy for you. Very easy for you. Look at them. Once you click it, you lock it. Now, I have used daily to draw. I have to go back to 4 hours also to draw the zones because you are not trading with the daily time frame. You go back 4 hours to also confirm these turning points. Look at them. Look at them. You see how powerful these turning points are? This, if you want to know, if you want to see them clearly, you can even use a different chart, what you call. If you use a line chart to do how, like, look at, this is a turning point. This is a turning point. This is a turning point. This is a support zone. It's clearer when you are using line charts. All right. So, guys, this is use a line chart to make it clearer for you. See? So whenever price touches these zones, you expect something to happen. It's either price turned from here because it's like history. You are reading history of the market. You're like somebody who has a girlfriend, and maybe you have a girlfriend, you're a woman too. Your girlfriend is someone that likes to snatch other people's boyfriend. So if you are going out with her, you are going to be very careful because of what she has done in the past. She likes to snatch other people's boyfriends. So if you are going out with her with your boyfriend, you will be very watchful. It's the same thing with support and resistance, because market has done this kind of on that particular spot. As the price is approaching this spot, traders all over the world, they are watching, and they are not using 30 minutes to draw their zones. They are not using 30 minutes time frame to draw. They are using 4 hours daily, weekly to confirm this turning point. Then, when trading, they can enter with a smaller time frame. You understand? Once you have discovered these turning points from a major time frame, like higher time frames, when you are going to enter the trade, for instance, now this is a buy, you can decide to enter this trade a 1 hour. But for volatility, I like to enter it even with 15 minutes, but it's very volatile. But for forex, I like to enter with 1 hour. Now, once you see a candlestick formation, like this is a bullish engulfing, all right? This bullish engulfing is, if you see something like this on this your support zone, it is a signal that the price may likely go up from here. This engulfing. So affirm your zones. You can bring down your time frames for early entry, because if you are using a daily time frame to enter, you have a very large stop loss. Let me show you an example. Let me show you an example. For instance, this you're seeing is a pin bar, or some people call it hammer. All right, this. No. These are candlestick information that you should be watching out for. Now, this is called hammer, or call it pin bar, kangaroo tail, so many names for it. but the name you call it does not matter. But look at it, just have it in mind that it's a reversal candlestick formation. If you see something like this red one here, let me blow it very big. If you see something like this, all right, appear on this resistance zone, it's a clear indication that market. But this is on a daily time frame. Now, if you want to enter this market, you wait until this candlestick finish. Let it be that the tail is very long, like as this one is long. The tail should be long and the body should be small. Now, after the formation of that particular candlestick, you can decide to use pending order to avoid some kind of unexpected losses, because market can go against you as well. We are only predicting, we are not the market makers. Now, if after this candlestick finish forming, this pin bar, you can put your buy sell stop from here. Then maybe your stop loss will be up here. All right. Then your take profit will be the next zone. Here is your take profit. Very, very simple way of trading. You don't need those complicated robots and all that to make trading decision for you. Now, this is a reversal candlestick pattern. Once you have seen this thing on a major resistance zone, it is an indication that market may likely go down from here. So you place your pending order, and then the market will just go your way. This is another one. This is called engulfing candlestick. You can see that this particular candlestick completely engulfs this one. This one is the one that closed last, but this one came and completely engulfed this. If you see something on your zone like this, you can be very sure that markets, you can put your pending order from here, allow that day to finish, because this is a daily time frame. It doesn't matter which time frame you're using, allow it to finish. Maybe you don't have time to be watching your chart all the time. You're always busy, you're working. You are going to be looking at all these daily time frames so that when you come back from work, you see what happens on that day so that you know what to do in the next day. Now, you put your buy stop on this particular, after the formation of this daily candlestick, your stop loss will be above. But the best thing to use, the best entry point is for entry point, you can be using 4 hours, or even 4 hours is large, except you are not there and the market just confirm 4 hours. Look at for the started at 4 hours, this is what happened. But at the end of the day, this is all these things made up that particular candlestick, all this noise making. Let's go 2 hours. Now, when you enter with a lower time frame, you have a better stop loss. When you enter with a lower time frame, you have a better stop loss, because the market, you enter early, but before you enter, you have a candlestick formation like that, such kind of bullish engulfing, or you can do the other entry is called retest. Two entry scale you can have. The first is engulfing candlestick like this. Then the next one is this. You can enter market when price moves down, some candles, all right, and then come back for a retest, then come down again. This is another entry. They call it the retest entry. You allow price to do this. All right. You allow price to do this. Is entry number 2. And then let's say price now give you a bullish, a bearish signal. Maybe that time you're watching like 1 hour time frame. Price gives another bearish signal. Now you can now go direct. You can place your buy, take your profit in this next zone. This is entry number 2. So the key is to learn how to draw these things, but don't draw with smaller time frame. Use higher time frames to draw your zone. Use higher time frames to draw. So let's draw another one again. Let's draw these zones correct. Let's draw them. Just be watching how I am using TradingView. You have to learn how to use this thing, because this is where you monitor your market every day. Play with it. Play with it. Just play with it. At first, it's complicated somehow, but it's a very good tool to use. Play with it all the time. You get it. All right. You go back. Say, okay, this is it. Let me say year 2 is a turning point. You come here, you click here. This is a turning point. You see that it's a turning point. Look at the touches, multiple touches. Multiple touches. Markets move down here, got there, it moved down. Multiple touches. These two places are zones. Multiple touches. All here is a zone. This one is 1 day time frame. If you go back to a smaller time frame, now you don't have to draw your this thing like zebra. Now that you've gotten them on a daily time frame, these are major turning points. All right. You now go back to your smaller time frame and be watching what happened. Bam, you've gotten your major turning points. You are going to be watching out for a trade setup. You see how price respect all these zones. Price respect all these zones, no matter what. Price respect these zones. Price respect these zones, no matter what. It respect these zones. You see? So this is for Euro USD. Let's look for another pair. Let's see EUJPY. The market is dead. The market is dead. Market is dead because of the holiday. You can see the market is not moving again. It's just stagnant somehow. So, right now, the first thing we want to do is to go to the weekly. You click here. Market is dead, Victor. Market, I'm not even looking at Forex right now because the market is not, look at it now. You don't use it. You can't be making a trading decision now. You cannot. You just have to wait. In my own opinion, this market is indecisive, no direction. You can't say you want to buy or you want to sell. This is just a market that is stagnant, like a stagnant water. the market is stagnant. Is a stagnant water now. No movement. So we have much to talk about right now. For forex is completely almost gone for this year until next year. So go to Euro USD. Even volatility is the same thing we're having right now. The market is going down. I think I'll stop trading volatility because market is not good now. The market, it will eat your money now. Okay, this is a turning point. This is it. The turning point. You just click it and then you lock it. You go again. This seems to be another. This is a weekly time frame. You lock it. Yes, you can include weeks. Yes. Look at how I included the week now. The week and the body. The week and the body. You can include the week because it's not a straight line, it's actually a zone. So the week and the body. But I will include the week and the body when I'm drawing them in a smaller time frame. Okay. So let's draw around this area of the market. This area where the market is where we are going to concentrate on now. This is one weekly time frame. Then we can now draw it down to a daily. You can see how nicely price have been respecting these zones. Our price have been respecting these zones nicely. Like when I say nicely, very neatly. Price has been respecting these zones. Imagine now you have placed a sell after this bullish formation, this engulfing candlestick. It moves down very, very neatly. See? Now, our price move. This is what they call top or retest. Price. This was an engulfing candlestick, but price after this went up a little bit, came down for a retest before moving up again. Nice movement. Now, if you want to trade this now, you have to allow it to retest here again before you can actually trade it. If you want to trade it, allow it to retest before you can trade it. Now let's look at volatility index. Let's look at volatility index. This is volatility index, and this is what the chart is looking at. This chart look like an uptrend that is going to be coming down, an uptrend that is doing a retest. Just hold on. Okay, so this is volatility index chart 5. Now, this market may come down from here. It may come down, it may test this zone, this trend line before coming down. Because I expected this market to turn today, but that's not what is happening. I expected it to turn from here because of this touch, but it didn't turn. It's going to touch this trend line. What I'm saying is going to touch this trend line before coming back to the downside. So this thing respects volatility index, even respects support and resistance more than forex. You respect it. This is a zone, 4-hour time frame. So we expect this thing to start coming down. It may touch this trend line, right? It may touch the trend line before coming down, because this cannot be, I'm not saying this market to be an uptrend anymore. It may touch this trend line before coming down. Let's look at 2 hours time frame. It may come down. From here, it's no longer a bullish. It's not. I don't think it's still a bullish. I mean, an uptrend. It may come to test this zone or this. So, right. So anything you want to contribute or ask, let us talk, ask, or okay. I use Fibonacci for a trendy market, Mr. Joel. I use Fibonacci retracement. Use Fibonacci to see the movement of the market. I don't use indicators, so as a naked trader, you don't have to use any other thing. But I use Fibonacci and trend lines to know the direction of the market. Fibonacci is to see the power of reversal, to know whether it is a reversal or it is a turning point. I use Fibonacci, of course. I use trend line, but I don't use any other indicator. You can draw it on your phone, yes. You can draw it on your phone. Fibonacci on this market right now. Let's see what Fibonacci talk about this uptrend. This market is not something, according to Mr. Fibonacci, this is the this 50 points, this one is a 50.78 retracement level, and /50 and 38 is still valid. So this market still, according to Fibonacci, this market is still bullish. But let's see what happened. It may touch here before retesting, before pulling back. It may touch here before pulling back. John, I don't understand your question, please. Yes, yes. Victor, if you are using Fibonacci, you must start from the beginning of the trend. The beginning of the trend. Let's say the trend begins from here. So you draw your Fibonacci based on this. You plug it to the place point where the replacement starts happening. So you must start it from the beginning. This is what I use Fibonacci retracement levels, is to know the power of retracement. When you are drawing a trend, you can include the week. You can see that this trend line, I drew it with the week included. You can include a week in your drawing. This market is going to turn from here. It will touch this point, then turn. Let's look at the daily time frame. It may get to this point and turn. But when drawing trend line, do you draw it at the week or the body? Most especially on the higher time frame. Yes, include it. You can include the week. That's okay. But most of the time, markets is not trending. Trend lines are drawn most of the time with smaller time, like 2 hours, 4 hours. You can see the trend. But most of the time, the market is consolidating, meaning up and down between two zones on the lower time frame. Austin, I don't understand you. Is it on what point? What do you mean by that? Okay, I'm thinking about this blue line, this up line now where my cursor is. The way it is now, I'm thinking of I am of the opinion that it will get to this point before turning. Gap. Joe, I don't understand what you mean by gap. You say move over to the daily time frame and look left. Okay. You just said sometimes uptrend and downtrend are not visible on weekly or daily time frame. Which time frame is suitable to use to do? That's why daily time, the market is not most times trending. The market is most of the time ranging. All right. So daily time frame is not the market. But if you are trading a smaller time frame, 1 hour of draw a trend on the time you're using to analyze market at that point in time. Somebody say limit here, sell limit will work. It will work with stop loss. In case it doesn't work, you minimize the risk, you have a stop loss. You have a stop loss. All right, guys. I think we have come to the end of today's class. I would encourage you to read some of those books that you have with you. Those books explain most of these things I'm talking about right now. And you will get more of these explanations in the books. You will see that everything I'm explaining to you is what the market is all about. Go and read Naked Forest. If you read that book, Naked Forest, or everything I'm talking about here, it is in that book. Read it. It's a very good book. You don't need indicators to tell you when to trade the market. You don't need them. Just know these key turning points and learn how to draw them correctly. Then you have already passed 50% of your journey in trading. By the time you learn these key turning points and learn how to enter the market, watch. That doesn't mean that you will not have some losses. You will. You will. There's no trader who will tell you I have not lost. No. Sometimes the trade may not go your way. It's very, very possible that sometimes your trade may not work. But if you can draw them correctly, trust me, most of the time it works. Most of the time it works. 80% of the time it works. If you can draw them correctly, 80% of the time it works. So guys, I want to wish you happy Christmas season. This tomorrow will be our last class. Yes, with volatility index, you can draw, but go to resources. I showed yesterday. Yes, that. Let us see it again. The strategy does not mean that you will not have some losses. Sometimes you lose. You lose. Market, you're not the market maker. But most of the time you make profits from this strategy. Most of the time you make profit. Most of the time, 80% of the time you make profit. I know that. Tomorrow is going to be our last class for the week for advanced. Our advanced are Wednesday to Friday, Wednesday to Mondays to Wednesday. So tomorrow is our last Monday and advanced class. Next week Monday we will not have class because of the season. I think next Wednesday is Christmas Day, so throughout that week we'll come back after the Christmas season. All right, guys, I'll see you later. We can talk on the group. Any other thing we can be discussing on the group. Have a nice day.